Welcome to the Daily Intelligence Brief from IntelStor for the 11th of December 2025. In today's top renewable energy news, Paris-based asset manager Eiffel Investment Group announced that it has raised 1.2 billion euros for the third vintage of its energy transition infrastructure debt strategy. Eiffel's energy transition funds aim to provide short-term flexible debt to green energy assets. They help to bridge the financing gap between limited equity availability and long-term project financing. The third vintage continues this approach by supporting the construction and rollout of renewable energy projects across Europe, attracting more than 30 French and international institutional investors. A $3.4 billion clean energy investment plan has been launched in Ghana to shape a responsible model for critical minerals. The plan will expand solar and wind power access for farmers. The Minister of Lands and Natural Resources called for climate finance that is accessible, predictable, and fair. He also called for strong technological partnerships that allow developing nations to act at the speed demanded by science. The National Energy System Operator has published an assessment of the illustrative costs of the Future Energy Scenarios 2025. The finding indicated that energy-related spending could fall from around 10% of GDP in 2025 to about 5 to 6% by mid-century. Energy costs as a share of GDP are projected to decline despite rising demand driven by population growth, increasing GDP and consumption from data centers. Turkey has seen numerous benefits from efforts to increase the share of domesticity in energy equipment. It has reached the point where the equipment used in solar energy investments can be produced with almost 100% domestic facilities. In order for the investments in this area to become fissile, projects that do not settle for domestic markets and take into account foreign markets have been implemented. As a result, Turkey has now become one of the world's leading solar panel manufacturers. Chile's National Energy Commission opened economic bids for its 3,360 GWh per year power tender. Offered prices range from $38 to $120 per megawatt hour. Reserve prices are set between $80 and $95 depending on the supply block. The tender offers power purchase agreements for the supply of electricity to regulated customers between 2027 and 2030. You can learn more about all of IntelStor's market and sales intelligence offerings at www.intelstor.com and subscribe to our channel today.